Welcome to the Oracle Yield Log. It's that time of year where we turn around and reassess everything. You know, I got into this with no money out of pocket and a HELOC loan in March. Went all in on AMZ. Then I added my own money to it. Anyway, the HELOC was no longer an issue. The first thing I did was put $50,000 aside into a checking account, to make those payments. Over time, that didn't matter anymore. My portfolio accelerated so much. It grew so much. I was the outcast. I was the one who talked about how important it is to preserve your capital. That NAV erosion is real. The more the NAV depletes or goes down in price, the smaller your dividends become, even if the distribution rate is the same. But conversely, there are funds out there that intentionally try to protect your NAV while paying you a monthly income. We all got into these because we were growth stock fans. Okay? The Magnificent Seven, Tesla, all of that drew us in. And well, we decided that we were okay with giving up our appreciation, capital appreciation, and to get some monthly income, because money now is what everybody needs and wants, especially this time of year when you're burning it on gifts to people you don't even like. But we move on. Something devious started to happen in the yield log fire. Something called capital erosion. People wanted to deny it. They wanted to ignore it. We were told we had to reinvest almost all of the funds they gave us. What was the point? So now we don't even have income. All we have are added taxes and bad moves. Some funds out there see things differently. There's a new change on the horizon. I'll tell you, even the yield max funds that have opened up at $50, like Platy. You know, when I talk about Platy, it just reminds me of the horrible interview that I just listened to with Retire on Dividends, the penis whisperer, and Jay Petrocelli. You know, Jay was about to talk about Platy, okay, and Dum Dum, the cross-dressing penis whisperer asshead, Retire on Dividends, turned around and said, I always wonder about pronouncing Palo Alto. Like with his lisp. I can't do a lisp. I have too much testosterone. And he totally distracted Jay, and Jay never got to talk about one of the greatest ETFs that could possibly be, which is Platy. I'll go into that in another video. I'm a fan. But the new $50 ETFs out of Yield Max are better than the old ones. Why? The prospectuses are written different. They're modern. It's a huge difference. But I'm not here today to talk about Yield Max. I'm here today to talk about, well, Curve. I am in shock. Let us step out of the fire of capital depletion and erosion. And believe me, it matters. If you invest 100, you know, there's a YouTuber out there, he always like to say, but where you get your money? Where you get your money to invest? The same place you do, you Cambodian jerk off, from my pocket. He likes to say, I get it from the dividend. No, schmuck. You got to start somewhere before the dividend. And then you got to pick the right ones, because let's say you muster up $100,000 and you put it into one of these funds that's eroding. You get a $4 payment, and then ex-dividend, it's a bad day. It not only drops $4, it drops $10. Your 1,000 shares just lost $10,000, but you got a $4,000 dividend. Happy you. The next dividend date rolls around, the price is down from $45 to $30. I'm not mentioning any names of any ETFs. And you know what happens? They give you a $3 dividend. Now you're already down. Okay, you're already down $6,000 capital. Now they give you another $3,000 dividend. Now you hit down $9,000 in capital. Okay? And then you got to recover the dividend. If you don't recover the dividend, you can't even count the dividend they gave you. Your capital keeps getting less and less, and the dividend gets smaller and smaller. It goes from 4 at $45 to 3 at $30. Anyway, conversely, if you're still listening, good for you. I try to do podcast style because your ears are more important than your eyes. Because your ears are directly connected to your subconscious, which retains the information. Anyway, let's continue on. I've dabbled. I spent 10 months not only multiplying my portfolio, but trying to find the perfect combination. And I think I finally found it. Has it been 10 months? Yeah, from March, 10 months. I went in and out of so many funds. My taxes are going to be a disaster. Thank God I have a good CPA. I'm not a jerk off with a TurboTax in a box doing it myself, masturbating in the mirror. Hire people when you make money. Anyway, I must have done, with no exaggeration, 300 ETF trades. 300. Sometimes I traded them. Yeah, I did. Did whatever it took to make money, but most of all, I learned that we don't have to accept reverse splits. You don't get delisted at $10. That was a myth, a fairy tale burning in the yield log. There are funds out there that are $2 and they're listed on Robinhood and they are not delisted. Reverse split is a choice that the fund managers make, and it's not in your best interest. At first they'll tell you, oh, it's a 20 for 20, two tens for a 20, it's the same thing. You got to the low price you got to by doing bad performance, poor trading, or overpaying the yield. And now you want to forget all that negative history of where your NAV fell like a rock and you want to reverse split and start again. That's good for the fund managers. Keep making that percentage, but not good for us, the community. I've gone on longer than I wanted to. I don't like YMAX, YMAG. I don't like the Magnificent Seven. I created this. Okay, I am ex-dividend now. The day after Christmas, I will get almost $7,000 in dividends from these 1, 2, 3, 4, 5 positions by curve. Now, what are these numbers here? Plus 38.95. Okay, people, you ready? I've been in this for 1 full month. This is 1 month of capital appreciation. I started with $20,000 in each one of these. I'm about to get the first dividend. I am shocked. They put out a statement in September they were going to start increasing dividends every month. And the share prices have gone up. Look, my share prices have gone up by $2,400. Apple, who would have expected my share price has gone up? I made $38.95 if I sold. I didn't. The only one I'm not happy with that I'm going to get rid of is NFlip, okay, which is Netflix. I don't believe in Netflix. It's old technology. It's just, I don't know. A lot of competition. I could take this money and add to each one of these. I started with $20,000 in each one. I just made them $40,000 each because of the performance. Google, Amazon, Tesla. I hate Tesla. I'm not a Tesla fan at all. But I don't invest in what I like or don't like. I invest in what makes money, and I was right on this one. And let's get to the dividends. They're amazing. Apple up almost $4,000 in a month. Wow, curve. Apple is paying $1.75 dividend. Apple is paying $1.75 dividend. The ticker is AAPY. Now, my son, I gave him $5,000 in a custodial account. He's a really little boy. You don't even know what stocks are. I drew on a piece of paper. Okay, Tesla in one color, another piece of paper. I wrote Amazon, and he picked 5. You know what he picked? Tesla, and Flex, which I'm going to make him get rid of. Google, Amazon, and XDTE. I explained it to him as the top 500 companies. Why would I buy a little boy income funds? Well, because these capital appreciate and do not erode. I'll show you a chart. I'm not compensated by anyone except myself. I'm not your financial advisor. Your money can burn. Do you hear it in the background? It smells misty, doesn't it? Musty or misty, who knows? Tesla paid $1.30. Now these have been increasing every month. Every month. Let me show you what Apple paid last month. I don't have the chart handy, okay? But let me just show you this is my thing. Stop reinvesting. Stop spending dividends on more high-yield dividends and start growing real wealth. Now, for 2025, my entire goal of 2024 was to find what worked and what didn't. And for me, the best combination seems to be my Mag 5 stability yielders from Curve. I love XDT. I don't care what anybody says. I don't care. You could be a hamburger or a turd. You could be in the White House or you could be in a trailer park. I don't care what you have to say. I like XDTE. It's proven over time to be a winner. Alti has been replaced with AIYY. I was watching it recover from its dividends. This has become a Frankenstein experiment. I don't know. But we might go back to the ugly girl one day, but so far, she just goes down on everybody and never puts out. We did accomplish a great thing, and I heard this in the 5 minutes of Retard on Dividends, the Penis Whisperer interview. I heard that, well, it doesn't even matter, okay? But they're trying to fix Alti. But what I really got from Jay in that moment was that he knows now how unpopular reverse splits are. They are off the table for now. AIYY was blowing up until the Powell speech. It was recovering from dividends. It was the silent sleeper. And it paid 108% yield. Unbelievable. So I replaced my Alti with AIYY. Now look how simple this is. The only thing I want to change, I want to do it before the new year, maybe I'll do it today, is get rid of Nefli. Okay? I would rather be in Google, which is more AI, Amazon, which is Amazon, Tesla, which is a great storyteller, and from the performance I've seen, I mean, the growth of Apply from Curve has been amazing. This is the Apple version from YieldMax, and if we take a look at this, go max time. I mean, this thing is growing. That's why I chose to give it to a little boy. And plus the excitement of seeing dividends come in monthly, like an allowance, and then you decide what to do with that. Oh, my son is going to learn core compounding. He's not going to be a chair collector. Anyway, for the holidays, I want to go out with a special shout out. Before I do, everyone, Merry Christmas. And if you don't celebrate Christmas, it's too bad. Anyway, so I like this. This thing is paying out a 60-cent dividend again. The special year-end dividends are great. And because of the way Roundhill, runs their funds, I think that we may see some lower in the beginning of the year, lower payments, and then they'll ramp up again. But again, it's a NAV holder or appreciator. This is my I can't even talk anymore, freak flag, AIYY. And this is my Mag 5 stability yielders. They grow and they pay. And this one pays every week. That satisfies that dopamine hit. This is the wild card. Maybe I'll replace it with Palantir, not sure. But we'll see. Subscribe and watch how we move along. I have a lot of haters out there and a lot of fans. But to everybody, I want to say, I hope you had your opportunity this Christmas season to kick an elf in the balls for luck. And, hey, Rod, Merry Christmas, you cross-dressing penis whisperer. Have a nice day.
Oracle, I don't think he hates me. He's just being a YouTuber. A lot of people think he hates me. It doesn't bother me. I actually invest. We invest in the same strategy. We have very similar idea. I'm a huge Oracle fan. A lot of.
I only drink the finest breast milks. Go out there and milk the Cambodia.
Let's put it that term. Just this slow approach to.
Slow approach, right?
Cambodian,
high yield
yeah.
dividend investing.
It's the real shit.